Bank of Canada is set to announce its next interest rate decision on Wednesday. Most economists are now predicting a 50 basis point cut. Our guest says that sounds plausible. He says that the Bank of Canada has now moved into proactive mode. Let's get more from Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. Great to see you, Jim.
Thanks for having me, Andy.
So you think the bank will go with 50 basis points this time?
Sure, and it's very uncomfortable for me to be part of the consensus, right? So I want to invoke Winston Churchill, who says, those that don't learn from history are doomed to repeat it. So we're late, Andy. We're late. And the Canadian economy the private sector is contracting. 80% of Q2 GDP was government spending.
Or growth
Growth. If we look at prices or CPI, when you take out the effect of the Bank of Canada, 12 months, CPI is at 0.39%. So they are below target, and using their playbook, neutral or the natural rate of interest rates is about 2.75. They should be below 2.75 right now.
To stimulate the economy.
Right. Whether they go 75, 50, or 25, Andy, we're not going to feel the effect of those rate cuts until April of 2026. They're late.
April of 2026. There is talk in the market of a 75 basis point cut. I know Avery Schenfeld of CIBC weighing the possibility.
Sure. My theory, I would suggest they should have gone earlier, right? I think 50. I think 75 would freak people out. I would expect austerity to happen in the United States and Canada in 2025, so growth is going to be a lot slower. And I think we've set ourselves up for a painful period in 25 in Canada. We're going to go through a painful structural adjustment, which in 23, when we were talking about this, there were a lot of people that had a lot of bravado up here saying, we can handle it. Well, guess what? We're going to go through it. And whether they cut 75 or 50, it doesn't matter. They're late. The private sector is contracting, and we're going to repeat the mistakes of previous central banks.
When you say austerity, do you mean government cutbacks or simply just a weak economy?
I would suggest that we can no longer sustain the government spending that we're doing right now, and we're going to have a pullback. And what was a tailwind for economic growth will be a headwind for economic growth. So I think it will start with the election in the United States, and it will eventually filter, unfortunately, into Canada. I don't think the Trudeau government is willing to pull back, but I think if the polls are correct and Poilievre gets in, we're going to see substantial cutbacks in government spending in this country.
Oil, you are cautious on oil. It plays into, you see a rough time in 2025. You see oil going as low as $50 US?
Yeah, so we've got the second largest economy in the world, China, in a debt deflation spiral, and they're slowing down. You've got, I would assume Trump's going to get in, and when he does, you're going to have drill, baby, drill. We're hearing rumors that Saudi Arabia wants to defend market share. Andy, that's 2014 all over again. And we have slowing growth in Canada. What I would say, though, and let's be honest here, right? The companies are much better managed than they were back in 2014. So when we talk, and Andy, I'm living 4 to 6 quarters out when we're talking about this. So when we talk to our clients at Wellington, I'm sitting here saying, what does this look like in 26? And what I would suggest to you is, I think we could easily see $50 oil. And that would be okay. That would be deflationary. But at the same point in time, the companies are in better positions today than they were at previous cycles. So will there be an emotional response? Yes. But I think they'll be able to weather it. So if you feel that you don't want to deal with that, sell some energy now.
Let's put up, maybe we could put up an ETF, the iShares XEG, the Capped Energy Index ETF, because as you know, the energy index is uranium and pipelines in it. And certainly looking at XEG, it's held up pretty well despite this weakness. The oil stocks, these are the producers, held up fairly well given the weakness in oil.
Sure. But if I'm right, and oil starts to collapse, shall we say, in 25, selling now and becoming prudent now, you preserve capital. So what my objective here as a strategist to get out 4 to 6 quarters and say, this is a very high probability. Long term, everything's going to be okay. The supply-demand imbalances are there. But in the short term, you could see oil back to $50.
We've got the S&P at around 5,850 right now. It is under a bit of pressure, but you see plausibly 6,000 for the S&P by year end?
Yes, and we started this call at the end of the second quarter. I came into this year expecting 5,400, and then when we had the really bullish sentiment coming into the first half of the year, I changed that to 58 to 6,000 by the end of the year. I still think we're there. I think the economy is not the stock market, and I think what we're going to start to see is the Fed and the Bank of Canada are going to be very proactive. Rates are going to be cut. The Bank of China is going to start flooding the system, and in the short term, Andy, liquidity trumps fundamentals, and we should have a very good year for risk assets, I think, until late this time next year, where I think the S&P could be about 7,000.
But you do see rough economic times next year.
I think 26 is going to be a really tough time.
Oh, okay.
I think for Canada, though, and this is one of the things that we've been doing, is I think the United States is the place to be, in the sense that we have secular growth there. There's AI. You've got housing. You have a secular growth in housing. And I like gold up here. I think Bitcoin is great. And so a diversified portfolio, but Andy, we know Canadians have too much exposure to Canada. So what I've been saying is get a little bit more out of Canada, put it into the United States.
And why is Bitcoin holding not far off record highs? Why is Bitcoin doing well?
The devaluation of fiat currency and levels of debt that we have not seen since the Napoleonic Wars. And so we would suggest to you that in an environment where we have a reflation trade, Bitcoin outperforms, and it is the number one outperforming asset class this year, then the NASDAQ 100, then the S&P 500, and unfortunately the TSX lags. So we like Bitcoin. We think it's going to be a standard asset class, and it's the number one performing asset class this year. And we would suggest that portfolio managers and investors think about putting an allocation in their portfolios.
To Bitcoin, just partly because regular currency being besmirched in the eyes of investors with these huge debts?
Yes, I think, Andy, when the United States attacked Russia in terms of the currency and their sovereign debt with the Ukraine war, I think that shook a lot of people around the world, and you started to see a lot of people buy gold, and a lot of people start to buy Bitcoin. And I think the purest way to play this is Bitcoin, because you do not get a supply response. So we would suggest between now and this time next year is the sweet spot in the bull cycle for Bitcoin. And for those that can, it is a volatile asset class. It's not for everybody, but those that like the volatility, they should consider it.
It's interesting. So you think when America went after bank accounts like that, it got people thinking no financial asset is untouchable?
If you and I were sitting in managing some sovereign wealth for a kingdom somewhere, and we saw what happened, maybe we would diversify a little bit away from the U.S. dollar and the U.S. treasuries and buy some gold and Bitcoin.